Hello and welcome to the Global View on this Friday. I'm Andrew Gagan. Good to have you with us here at ausbiz. Let's check what happened overnight on global markets. They rose, that's despite higher bond yields. Investors on Wall Street continued to digest results from AI chip maker Nvidia. And in choppy trading, the major indices all finished higher, with the small cap Russell 2000, the best there, up 2%. Well, shares of Nvidia finished higher also, having fallen after the market closed yesterday. It did surpass expectations for quarterly results and projected fourth quarter revenue above estimates. But some investors were unimpressed that the forecast was at its slowest in 7 quarters. Alphabet shares were hit after the US Justice Department argued that Google must sell its Chrome browser, share data and search results with rivals, and take other measures, including possibly selling Android to end its monopoly on online search. Amazon slipped on a report that it will likely face an EU investigation next year into whether it favours its own brand products on its online marketplace. Shares of machinery manufacturer Deere jumped after reporting an upbeat fourth quarter profit. And shares in AI company Snowflake surged after raising its annual product revenue forecast. Cryptocurrency blockchain related companies, shares initially rose but then fell quite dramatically. That was after Bitcoin touched another record high. Just some question there over the valuation of those companies. And the gold miners rose, tracking the bullion price higher. Well, the US is more vulnerable to inflationary shocks than in the past. That's according to Richmond Fed President Thomas Barkin, while Chicago Fed President Austin Goolsbee has reiterated his support for further interest rate cuts. Meanwhile, the number of Americans filing unemployment claims fell to a 7-month low last week, suggesting that jobs growth has rebounded in November. And markets are waiting on President-elect Trump's nomination for Treasury Secretary, while his Attorney General pick, Matt Gaetz, has dropped out in the face of Senate opposition. US government bonds earlier drew a safe haven bid after Russian President Vladimir Putin confirmed that his forces had fired an experimental ballistic missile at Ukraine. The yield on the US 10-year note up to 4.43% and the 2-year yield rising to 4.34%. And the US dollar has strengthened against most major currencies, the Aussie trading at 65.1 US cents. Bitcoin pushing towards 100,000 US dollars, currently up over 98,000. It's up some 40% since Donald Trump was elected 2 weeks ago. And bolstering the outlook for Bitcoin overnight, Securities and Exchange Commission Chairman Gary Gensler announcing that he plans to step down from his post on the day that Trump is sworn into office. Checking in on commodities, oil prices have risen along with that escalating conflict between Russia and Ukraine. Brent crude futures up some 2% to $74 a barrel. The copper price has come off while iron ore is up more than 1% to 102 US dollars a tonne. And gold has risen for the 4th straight session, up almost 1% to $2,670 an ounce. All right, so to get across what we're seeing, particularly in the equities on Wall Street, with a view to the end of the year and beyond into 2025, I caught up with Sam Stovall from CFRA Research.
Well, I think we could see the S&P 500 close at about 61.45. That's been my target for a while. And I believe that we'll have a good but not a great year in 2025. And I'm giving a year-end target of 65.85 for next year. You're absolutely right about the Santa Claus rally and about the end of the year. Historically, all sizes, all styles, and all sectors within the S&P 500 have posted average increases in the final 2 months of election years since World War II, as well as 97% of the much smaller sub-industries. So traditionally, we find that investors are optimistic once the presidential election has come to a close.
So just taking a look at where those sectors are, how they've performed, what are your expectations where they're at now and next year, where you perhaps have some caution?
Well, the caution is that more to do with volatility. We are in the 3rd year of this bull market, and historically, those 11 bull markets that celebrated their 2nd birthday went on to post average gains of only 2.2% in the 3rd year, mainly because 3 of them slipped into new bear markets before the year was out. 2 declined outright, not enough to become bear markets, and 3 more posted below average gains. Our belief is that investors will continue to focus on growth because they don't really want to be playing a waiting game of buying beaten up stocks that are value oriented that might not come back since value has been out of favor for a while. So we are entering 2025 continuing with favorable outlooks for communication services, financials, industrials, and technology.
So, Sam, how are you factoring in a Trump presidency? And I guess we do have to wait until he actually gets his feet under the desk there at the Oval Office before we know whether he's actually going to follow through with some of these policies. But given what you've heard, what are your expectations, particularly as far as economic growth is concerned?
Well, broadly, I think we're going to have a relief of regulatory pressure. So that is already helping the large banks in particular and financials in general. We also think that if fluoride is taken out of the water here in the U.S., that could benefit some healthcare supply companies that will then sell the product directly to consumers. We also think that part of energy, the liquid natural gas area, should benefit because they could remove the moratorium on LNG licenses. So there are a lot of little areas that could benefit if there is a tax reduction on corporations as well as on individuals. It will balloon the debt and deficit, but at the same time could end up spurring the economy. Right now, we're looking for 2.4% real growth in the U.S. in 2025, slightly lower than the 2.8% that we anticipate for this year, but still with the expectation that the Fed will continue to cut rates that will provide at least a support under the market.
Yet, clearly, there is concern that his policies will be inflationary, not the least given his outlook on trade and tariffs and what that could do for domestic prices there in the States. How are you factoring that in?
Well, right now, our feeling is that it could end up being more of a negotiating tactic, because if we can come to some sort of an agreement with China, I think that would be explosive to the upside for global stocks and for the sentiment of investors in general. Certainly, tariffs could benefit some groups like steel, like aluminum, like timber, which have been the subject of dumping from foreign governments of their oversupply of commodities. But I think that in general, if we do renegotiate treaties with different countries, then that could be very beneficial. And so right now, the reason that the word tariff is his favorite word is because he's planning on using that as a lever.
And Sam, what is your outlook for big tech? We obviously have a focus on the Mag7, given how they've driven the broader market there. But in the wake of that result we've just had from NVIDIA, how do you see the outlook?
Well, as we see today, tech, even though we've seen a broadening out of the market's activities, tech beat the market today by a 2-to-1 margin in terms of price gain. We also think that this sector will post near 20% earnings growth, not only this year, but in 2025 and 2026. And that's really where tech-oriented investors are focusing. They're not even bothering with 2024 anymore. And some would say that their eyes are set firmly on 2026. So maybe that's simply a way to justify valuations, which are currently a bit lofty at about 28.5 PE in 2025, but we look at about a 25 PE for 2026. So maybe some more upside potential ahead.
Sam, I'm just wondering whether you're able to comment on Alphabet, given the US Justice Department arguing it needs to break up its empire. Are you across that, and what the potential implications of that, if that were to occur?
Well, I think I'm going to cheat right now and actually pull up our report on Alphabet. We still have it as a buy recommendation. Certainly, it is something that I think investors are going to be looking at and wondering about. But if there is an appeal, well, that appeal will probably last beyond the inauguration date of January 20th. And so possibly we could find that it's all much ado about nothing. So I think that it is a situation where once the Republicans take over, we'll find that the regulatory pressure will probably be lifted, and that could be a sigh of relief for the technology sectors and other areas of the market.
There's the view from Sam Stovall from CFRA Research. So let's turn to the local market. We're expected to get going. A very positive start on the cards. SPI futures up more than 0.9%. And certainly a focus at the moment on AGMs. We're in the thick of it with more than 20 or so companies holding their AGMs today. So we're going to right across the updates from those as the morning unfolds. Stay with us. The open a couple of minutes away.